It's been a busy week for GameStop here. We've seen the stock go from, on Friday last week, from $17 all the way up to $65, which was a 3.6 times increase, and now all the way back down to $22. And I want to break down a little bit of this fiasco for you guys. There are a lot of key takeaways to take from here, which will keep you safe. And if you've been affected by this, there's some really valid stuff that I want to tell you guys about in this video. And I want to cover what I think might happen to GameStop next as well. I'm a crypto guy. I've been in crypto for 7 years that I've been trading these markets, and this chart is very much what I'm used to seeing in crypto. What they've done with GameStop is they've taken a weak company that does not deserve to have a stock which is going up, generally speaking, right? And obviously we can see this if we really look at this from a super long-term view. This is not a stock that is strong, right? It only really picked up because of the meme stock saga that took place in 2021, and since then it's been holding fairly well, but it's caused a lot of trouble for a lot of people. And the thing is if you've been following this, there was a revival of the meme coin stuff, right? The meme stock stuff. Roaring Kitty came back to Twitter, 4 a.m., May 13. This is Dubai time zone. You're sitting up, holding the controller in your hand. Ansem's asking, what are we buying? GameStop absolutely skyrockets right after that tweet. You can see that chart here. It was all popping off with the same narrative stuff again. Obviously, we had some other massive people as well. One of my friends actually as well, including Andrew Tate, talking about GameStop as well. And I think all of that's great, right? Like, the narratives are fantastic. The retail rugging, the big institutions, the little guy finally starting to get a win. And obviously that's what happened here. But you need to dive into the reality of what took place in 2021 to really understand what's happening here. A lot of people haven't been paying attention to this stuff, and that's why they're looking at a bit of trouble now. And again, I will tell you about where I think this is going to go, but before we even talk about that, the first thing we need to understand is that this entire rise here happened because there were so many short sellers, and the idea was that if you can start closing those positions out by pumping the price, well, you're going to see a big pump, right? And the mechanic of that is very simple. The mechanics here are that let's say you've bought something. Let's say you have an active position where you bought gold. This is a very easy idea to digest. You've got an active position where you've bought gold. The only way to close that position is to sell your gold. And when you go to sell it, you're going to be selling it back in the marketplace, right? So whatever the market rate of gold is, that's the rate you're going to get for your gold. Now, it's the same thing if you've got an active short position. If you've got an active short position, the only way to sell that position is by buying that back. Okay, and when you buy it back, you're going to go back to the market, and depending on where the price is, that's where you're going to be buying. And when you buy, you're going to push the price up because you're buying in the market. Same thing if you're selling gold, you're going to push the price down, okay? So that's what was taking place back in 2021, but the problem today in 2024 is that, all of the, trading halted. There was all sorts of, crazy shit going on. There was the SEC stepping in. It just got crazy, right? Various 3-4 letter government organizations in the United States getting very, very upset about this. Obviously, hedge funds that, this whole thing came about to defeat, losing a lot of money. It was a massive, massive drama. And so naturally, there were just less shorts this time around, right? And this is what I want to convey with you all in this video, is the really realistic, boring side of what's going on, right? This GameStop saga is entertaining if you're following Twitter and you enjoy sensationalist news. But if you really genuinely want to make money, then this is the conversation you're going to be paying attention to. And of course, this is what we're delivering on this YouTube channel. So make sure you subscribe if you found this useful or entertaining so far. Smash up the likes. I want to tell you a little bit more about this, because when you start to really upset a market like what happened back here, you are naturally going to have significantly fewer market participants to fuck over the next time, right? Previously, if there were a lot of short sellers here, there weren't going to be so many this time around, because you've already burned them. They're going to move on to something else. Good traders, people who manage money, they don't put their money in stupid places twice. The thing that, retail really wants to rug the big players, right? The thing that I think retail don't understand here is that these big players who have a lot of money, who control the world and whatever conspiracies you want to go down, and, I'm not saying that they're wrong or anything like that, but, these big players, they have a lot of money because they're smart with money. It kind of goes hand in hand. And so, if you've made a mistake once, smart people are not going to make the same mistake twice. And that in itself is actually a really big explanation for what happened here and why we didn't see such a big rise. It can certainly go back up again, so bear with me before you go crazy in those comments. Or go crazy, it's okay, I like the engagement. But the other thing that's worth noting is back here, you didn't actually see, and there's a lot of data to back this up, you didn't actually see a lot of short sellers closing their positions and buying back. What you actually saw was a lot of retail just buying the price and buying the stock, and the price was going up. That's two different things, right? Because the objective is that we get the giga short squeeze, right? The biggest short squeeze in financial market history, where everybody that's in a short position has to close their position. And again, the way I mentioned earlier in the video, the way you close a short position is by buying back in the market. And if you're buying back in the market, naturally, you're going to push the price up again, because you have to buy at whatever the market rate is, right? And if there's only 1,000 shares that want to be sold at price X, then you've got to go higher than price X to close your position out, right? So that's the objective here. But a lot of data is out there, and you can actually check this out yourself to suggest that the main price action that came about here was not short sellers closing their positions. It was just retail people buying. And obviously, I think we probably saw the same thing over here, which is probably also why the effects were reduced here. But now what we've had is a very interesting article here from CNBC, and just basically everybody talking about the same stuff here, where GameStop, after this big pump, and it's so ridiculous that it's almost like GameStop orchestrated this themselves. It's almost like, and obviously they didn't, but it's almost like they hacked Roaring Kitty's account himself to get him to start this drama again, because this gave GameStop as a company a phenomenal opportunity to exit their holdings, and that's exactly what they've announced they're doing. GameStop will sell up to 45 million common shares in at-the-market offering. They've also announced a drop in sales, and this all comes after the stock price has massively skyrocketed here, right? So this really tells us a lot about how this time GameStop's not messing around. And, you can throw around your theories for why this is happening, but ultimately a company will sell stock because they want more funding, and they will anticipate perhaps buying it back lower if they feel like the stock will go to a lower price. And so this gave GameStop a really nice, basically, exit pump to get out, and at the very same time, this was all just hype again, taking the price of GameStop up, but it's all kind of come crashing back down, almost like GameStop themselves rugged retail. The other thing which is quite crazy is that they're also issuing new shares, and this is a new announcement that they've just made as well, which is basically inflation for the stock, right? I don't know if you guys were following things like Apple or Tesla over the last couple of years. These were some of the other big high-profile cases of the same thing happening. It's actually fairly normal that stocks will issue stock splits, or just stock inflation, you could call it, where there's going to be more stocks, more shares available in the market to buy. I might not be fully technically correct here, but the point is still definitely correct, which is that there's going to be an effective inflation here, which is going to work against you when you're trying to buy these kind of meme stocks as well. And this is where the problems start coming in. I want to, in fact, before we get there, let's get a little bit technical and talk about where this can go, because this is, the beautiful thing about this is that even though this is ridiculously stupid to be participating in, it is actually a really nice display of psychology. You can really start to draw some interesting conclusions off this. And obviously, when you get these kind of pumps, resistance levels don't matter, support levels don't matter, stuff like that. But you can still look at longer term trends. You can still look at longer term levels and discern some interesting things. For example, we did have an interesting support level for GameStop right here at the $22 level, and that's exactly where this massive dump stopped, right? I mean, the price closed at $27 on Thursday and opened at $21.99 roughly yesterday, today, depending on your time zone, on Friday. And that's a 20% drop on open. It's crazy. In fact, I'm surprised they didn't even halt trading for that. And so, we've got, a very, very nice support level that's coming down to. And we've probably got some more a little bit lower down, right? We've got some other interesting levels that, if you're looking to, if you're wondering where this thing can go down, here's an interesting floor for that to happen at. And obviously if the rally is over, then there really is some trouble, because now actually what you're starting to see is that retail people who are not experienced in the market, have bought this stock as it was ripping higher and higher and higher, and they're in long positions. And guess what, ladies and gents? If you can trigger a short squeeze by taking the price up, then you better believe that you can trigger a long squeeze by taking the price down. And what we have on the flip side is that where you've got larger hedge funds that have patience to hold on to positions, and they have systems, they have contingencies in place, you have retail players who have feelings, retail players who have excitement, and in this case fear and uncertainty and doubt. And these are things that will lead people to close their long positions. And that's, again, why we're seeing such a drastic rip down coming immediately after this news. It was a series of hard-hitting, bearish news for the stock right at this exit pump, almost like it was, if this was crypto, I would say this is engineered manipulation. I'm not going to say that this is the case for GameStop. That's for you to decide. I don't really care. But if it was crypto, it would be, the writing is on the wall. This was an absolutely fully top to bottom orchestrated move for the big smart guys to get their exit liquidity off retail, right? It's a conspiracy in that way. Again, I'm not saying that that's what happened here for GameStop, but if you're seeing what I'm saying, I don't think that's what happened. I think this is literally just, retail pushing this up again, but it did work out very conveniently. And I'm sure that they had their board meetings where they said that if this kind of thing happens again, they will be selling some of their stock, and they probably did take advantage of that here. So, bounce zone at, basically right where we are now, failing that $15. If it manages to bounce off $15, again, there's a lot of upside here because things could get pretty crazy, but I think you're also going to start to see retail getting burned, right? Like what happens over here, and this is very typical price action for a stock or a crypto coin or whatever that's about to top out, is that you get this insane whiplash action where the same short squeeze action turns into long squeeze action, and then it recovers a little bit, giving people hope that it might recover fully. But of course, it never does, and it just trades sideways, and then you lose levels. And actually, this also is very reminiscent of silver. Silver has been looking like this for years, if not decades. It's the exact same thing that silver had, where it got this crazy kind of whiplash price action. Obviously, it's not as crazy because it's a commodity, but all it does is it drops down, it enters a new range. There's more hope here. It doesn't work out. Drop down, enter a new range, more hope. Here, you're anticipating the same thing happens again, but obviously this turns out to be a liquidity grab, and the price comes moving on upwards. And now, only now, over the last weeks, we've seen the breakout for silver, and I actually think that that's because of gold, right? So silver is obviously just going to lag behind gold a little bit. But the point is that, especially with things like this, the reason I like these kind of charts so much to demonstrate points to you all on this channel is that the psychology is always the same, right? Whether it's GameStop and, a fiasco going on Twitter, or it's silver where you've just got people who have, are a little bit older in life perhaps and just are too emotionally attached to silver, hoping that it would be like the second gold. You're seeing the same psychological patterns play out, right? You've got the same horizontal zones. You lose the zone. Take a look at this, right? It's the same chart that I showed you with silver all over again, right? You can see perfectly that history rhymes absolutely beautifully. We get that liquidity grab over here as well, right? So very, very similar. Sideways here, sideways in a lower range, sideways in a lower range, and sideways in a lower range still. So again, very much a meme stock. Everybody knew this, but again, the problem is that they don't anticipate that on the way down. The same thing that they're hoping to trigger, can be what they themselves become a victim of. And there's a few key takeaways here. When the point I was making when I showed you that, it got burnt out and, you just saw a bit of sideways trading, but it never came back up is that, right now there is a lot of potential for the same thing to happen again, right? There's going to be some residual interest in this stock because it was recently trending. There's going to be there's going to be a large percentage of people that are like, fuck this, I'm out, that didn't work, I'm down 20k, or I'm down $200, or whatever the hell it is, I'm out. And there's going to be another cohort of people that are thinking, wait, maybe there's a chance. Maybe Roaring Kitty will post another tweet. Maybe there's going to be some more, maybe more people are going to pile in on this. Maybe, maybe we are going to get Wall Street this time. There's going to be all sorts of narratives, and there are going to be people that, hold on to it, and then they're going to drop off. And then there are going to be even more people after them that won't let go of it. And they're going to be holding it, and they're going to be like, well, you know what? I don't really care about the money. I'm going to stay in, and hopefully there's another pump and I can get out on that pump. There's always going to be people like that. And that's why you see this residual interest here, right? So I just want to point out to you that this might be what to expect next. It's quite long term. You'd have to come back to me after about 7-8 months so that we can talk about it. But it would definitely not be surprising to me if that kind of thing plays out. So I wouldn't be too surprised if GameStop manages to get back to about $40. I wouldn't expect it to get back up to 65 necessarily, unless there's a big resurgence in the hype kind of narrative. But at the same time, hype is one thing on Twitter, but GameStop, selling their shares and, not being profitable, and not being in a position to generate profits as well. Right? Where did I read this? I can't remember exactly where it was. It was somewhere here, right here. This person's not in GameStop, but he is an analyst covering GameStop, mentioning that GameStop is not even in a position to be profitable, right? I mean, this is a dying company. We all know why, right? We all know what GameStop is and how they've been replaced by Steam and so on. It's just not the time for them, and unless they were to significantly change the angle that they take in their industry, and basically adopt a brand new business model, there is not a whole lot of hope for a company like GameStop at this stage, which is why it's become a meme. But as I'm saying here, the meme coin narrative and the firepower that can push is one thing, and I would consider it, but real life factors are another. And they clearly have outweighed the meme coin narrative for quite some time. And I think that's why there was no revival for a couple of years. And I think that's why when there was a revival, you've already seen such a sharp drop down as well. Just for shits and giggles, though, let's throw a Fibonacci on this, because that's hilarious. And while you are watching this, if you're finding this kind of content interesting and entertaining, definitely feel free to subscribe and hit the like button. I'm covering crypto analysis mainly. I'm interested in, this shorter term profitable opportunities that you can trade in the market. I'm going to tell you what I'm looking at, why I'm seeing what I'm seeing. I try and keep the videos quite neutral, bullish and bearish thoughts covered. I'll let you make your own opinions, your own conclusions. I really don't care which way you go. And of course, while you are down here smashing that like button up, if you're interested in trading crypto, we've got some phenomenal offers for you linked below. You're going to get $30,000 on Bybit, which is my favorite exchange, when you start trading using my link below, when you make your deposit and start trading. And BingX is a no KYC alternative as well, which is going to give you over $100,000 in bonuses. So that is super cool. But we come back to all of that later. Like I said, just super, super cool, sensationalist sometimes content on crypto, but obviously the same kind of grounded vibe you're getting right now. Where are these fibs at? So we saw, an interesting, there's an interesting little bit of potential resistance up ahead for the GameStop right here. This stuff doesn't matter. I think GameStop is probably going to move in quite crazy, like, rubber banding type price action for a little bit. But, some interesting resistance up here at 43 as well. But let's start talking about some of the key takeaways here, because we see this all the time. Like I said at the very beginning of this video, this is a kind of chart setup that I'm very familiar with, even though I'm not generally a stock trader. I've traded stocks here and there. I've actually done pretty well, but I don't generally do it. It's for a couple of reasons, mainly that I like crypto more. I just find it more enjoyable. It's just crazier, right? Stocks are a little bit more sensible, apart from GameStop, of course. And, one of the key takeaways here is not to ride bandwagons. The thing about bandwagons is that you're going to see people getting very rich off things very quickly, with these kind of bandwagons, right? You're going to see stories of somebody buying GameStop a couple of weeks ago, and they sold it when they pulled a 10x, and now they bought their mother a car, or whatever crazy shit goes on. Now they're just rich, right? They turn 200K into 2 mil, whatever. You've heard these stories. And those stories are very alluring. But it kind of goes back to what I mentioned a little bit earlier on in the video, which is that smart money doesn't do stupid things. And because of that, smart money doesn't typically lose money, right? Like even though, and by the way, there were some hedge funds that were, not fitting in with what I'm telling you. And some hedge funds that were ridiculously overexposed in shorts on GameStop and stuff like that. And they rightfully went bust because, it doesn't matter ultimately if you're rich or if you're poor. If you're not exercising good risk management and you're putting too much money into one position or one idea, well, then something like Roaring Kitty is going to come along and you're going to get fucked, right? And that's just life. That's what trading is, and that's why you have good risk management. But ultimately, generally, retail are the people that make stupid decisions and they suffer the consequences of it when, the opposite long squeeze comes, when, you're 60% underwater in a position that you had no idea you were going to take 2 weeks ago. You didn't even have GameStop on your radar 2 weeks ago, and then now you're wondering what to do and you're overexposed, and so you sell and you drive the market lower. These are the kind of typical things that always take place when people ride bandwagons. The kind of, the sensationalist stories that you hear where people make a lot of money off these kind of things are very much the exception. And I would actually liken it to winning the lottery or getting struck by lightning, and that it's probably not going to be you. You can try and position yourself to do stuff like that, but the problem you'll run into, and again, I've been trading for 7 years, so you better believe I've been that guy too, who's tried to do these stupid things as well. And what I've noticed over these years is that you can keep trying, but two things will happen. Number one, you will run out of money trying to catch these waves. You'll run out of money for two reasons, actually. It branches off for two reasons. Number one, you'll run out of money because you're going to put it into so many things that just won't work out. And number two, you're going to run out of money because you're an idiot in the first place. So you're not going to allocate your funds sensibly. And you're going to put too much money into the first 3 ideas you have. And you're not going to have any money left for the remaining 17 ideas that you get in the next couple of weeks, right? You already don't understand risk management. You already don't understand how to trade sensibly. So you're just going to dig yourself into a hole doing stupid things like that. You're starting to get the sense from this video, especially if you're new to the channel, that this is a very boring, sit down, open up a fucking book and learn some financial hygiene type thing. And that's what I'm actually bringing to you. There's no sugarcoating it. There's no, I went from being an absolutely shit trader that lost all of my money many, many times to being the trader that has this right here as my pinned tweet on Twitter, right? 2 years ago, I dropped out of high school. Today at 19, a couple of years ago, I bought a Ferrari, take risks in life. Like I am somebody who has been through this process and come out the other side. And the only thing that was able to get me there was this completely boring, unsexy approach of good risk management, not doing stupid things, turning my head away from all of these bandwagon type narratives, because I understood eventually, after losing my money many, many times, I understood that these kind of hype wave bandwagons are not what end up paying you. So the first reason is that you'll just run out of money. And the second reason it's not a smart idea is because you're not in control of your destiny here, right? When you're buying these kind of things, hoping that, a meme narrative comes along, what you're doing, and by the way, it definitely could work, right? Like some of these are logical. For example, in crypto, we had Dogecoin. Elon Musk was talking about Dogecoin. So Shiba pumps, right? Shiba is just another type of Dogecoin, right? Shiba pumps, then baby Doge comes along. Whiff comes along, dog whiff hat, right? Like peripheral ideas which are adjacent to the original idea, peripheral ideas which are kind of in line, kind of like on the side of the main thing, they will naturally get some shine as well, right? So you can definitely apply logic to it, and then you're not really doing what I'm saying here. You're actually doing it in a pretty smart way. But if you're doing it the way most people are doing it, which is jumping on the bandwagon and smoking this fucking crack hopium pipe, that we're going to revolutionize finance, and this is going to be France in the 1800s once again. These are fun ideas, and they're definitely very fun to even, fuck it, if you really want to, if you really need to, throw $100 into or whatever. But they don't tend to work, and it's because you're not in control of your destiny. You're hoping that something external to you will make you money, and that's a problem, right? I think one of the reasons that we as traders or people that are in these markets are interested in trading is because we want more direct control of our finances. We want more direct control of where our money goes, how big our money becomes, so on and so forth. And when you're in that kind of position, you don't want to be staking your capital on a couple of tweets from people. It's just not stable enough for somebody who genuinely is serious about their capital. It's fun, and I will participate too if I really feel the degenerate urge to participate. But like I said, only with something like $100. But what I'm going to do with most of my money is the boring, sensible stuff that you probably already know you should be doing. If you're wondering what that stuff is and you don't really have that kind of financial discipline here, that kind of financial hygiene, then I can lead you to some pretty good resources for that. You can actually just, again, check the same description right here and just reach out to me directly on Telegram. I've got a team that works around the clock. I've got a beautiful course that can teach you about it. If you're not into that kind of thing, if you don't want to pay for anything, I also made a pretty cool starters video right here, how to turn $1,000 into $1 million. This was a much younger Sammy, which you can definitely check out as well. Those are some of my resources. There's a ton more out there. You definitely don't have to pay me anything or watch my own content for this, because I didn't learn from me. I learned from other people too. You can pick up books about this. You can just ask ChatGPT, for fuck's sakes. We're in 2024. Get yourself a $20 ChatGPT Plus subscription. Speak to GPT-4o and ask it to teach you about financial discipline as a trader. And what you'll start to see is that you're going to be far more in control of where your money goes and what your money becomes and how quickly it grows, how much you lose, and different things like that. And ultimately, if you're doing something serious for your future, that's the most important starting point you can have. Now, look, this is already a 25, 26-minute video. I can make this 3, 4, 10 hours long if I needed to keep going into these subjects, but I don't want to go deeper on this. This is a spin-off from the kind of content that I typically cover, and I did it in my style. I gave you guys a little bit of background about what was going on while I'm here. I want to give a big shout out to the Plain Bagel, because a lot of the information I was referencing here is information that I got by watching his video on the GameStop saga just a couple of days ago, actually. So definitely check him out if you want more in-depth data to back up some of the things I was saying as well. It might not be fully up to date at this stage, but it's still a good video. And ultimately, like I said, did it in my style. I'm covering a little bit of the charts. I'm relating it to stories from my own life, telling you guys about my take on this. And obviously it branches out from what I usually do, but I think it's interesting. And if you think it's interesting as well, I want to know. So let me know by smashing the likes up, telling me what you think about all of this mess in the comment section below. And if it's something we're going to do more of, I don't mind. Naturally, as I always say, anytime I experiment with content on this YouTube channel, I'm still going to keep the same core content that you guys come here for. It's the same core content that I want to make, so I love doing it, and I'm very happy to continue. GameStop right here. Could it be due for another leg? Yes, anything is possible. Do I think it's going to happen? No. I think from everything I've seen, this chart looks very much like our most hated participant in the crypto market, XRP. And if we do watch back to see what XRP does, it's exactly, actually, this is a bad chart. It's exactly what happened here with GameStop, which is that you get, why is there not a single good XRP chart here? Just one second. Here, Poloniex will surely have a lot of price history. There we go. Bear in mind, by the way, we're on the weekly time frame, right? This is a super long time frame. Let's look at this on the daily instead. And GameStop and XRP here, I mean, very, very similar. Very, very similar setups here, right? So I'll just show that to you on this chart. We'll look at the 3-day on XRP, and we will look at the GameStop chart as well. And you'll start to see, I mean, stark similarities here between these two charts, right? Take a look at this right here. Look at this crazy shit going on. And like I said, if GameStop starts doing something similar to this right here, I think you would struggle to tell me how this is different to XRP doing something a little bit like this, right? Where, you get the same kind of initial, go logarithmic just so we can see this. You'll get the same kind of initial big move up. You'll trend down for a long time, because the truth is nobody gave a fuck about the coin or the stock in the first place. They only bought it because there was hype. And as soon as that rug gets taken out from beneath your feet, again, like I said, you're left with those people that cut it quickly. Some of those people that cut it quickly sell way down here, where they could have actually sold significantly. How we doing, Ghost? We all right? They sell way lower because they're impatient. Some people wait a little bit, wait a week or two, and then get a better exit and leave. Most of you are not going to be those people. And other people just kind of hold on to it for a really long time. And then eventually they get the second pump, and it's the second coming of Christ for these people. And of course, it doesn't materialize into anything. And, the good thing is with this chart, and because we've got so many examples of this, because this is a pure display of psychology, with this chart, we can play it back and we can see what actually happened. And with XRP, it was horrible. Nothing ended up coming out of this. It just traded sideways. It was more hope, more people expecting that this consolidation turns into a pump. The pump never comes. The dip keeps dipping, and ultimately you get a chart set up like what I'm mentioning could happen here on GameStop. So I'm very open to be wrong. I would love to be wrong because it's amazing to see what firepower, just social media has. And I think that's super, super cool. But at the same time, I'm trying to stay realistic with you guys. I know that's what you come here for. XRP, GameStop, phenomenal displays of psychology for the exact same reasons. They have the same damn chart. And, and to me, history has already shown us what this psychological kind of playground produces for us. And I'm not interested in contesting that because this time is different.